Hello everyone and welcome to Investing by the Books, a podcast by Redeye. I'm your host, Eddie Palmian, and with me in the studio is my friend and colleague Niklas Sävås. In this episode, we are delighted to have Lodewijk Petram on the show. Lodewijk is an economist and historian working as a senior researcher with the Huygens Institute in Amsterdam, Netherlands. So, Niklas, which book will we speak about?
So today we will speak about Lodewijk's book, The World's First Stock Exchange, where we get to learn about the listing and trading of the Dutch East India Company during the 17th century.
And what do you think about it?
It's a really fascinating story which provides investors with a lot of perspective, which is often the case with historical books. Shares have been bought and sold for over 400 years, and while a lot has changed over time, the human psyche remains the same.
The English translation of The World's First Stock Exchange was published in 2014, and we're excited to have the author on the show today. Here comes our conversation with Lodewijk Petram. Hi Lodewijk, and welcome to Investing by the Books podcast.
Hi, good morning.
It's great to have you on. Where are we reaching you today?
From my house in Haarlem, close to Amsterdam in the Netherlands.
Great. And to begin, we're curious how your passion for economics and financial history got started.
I've always been interested in history already from a young age. And then in high school, I also got interested in economics, found it an interesting subject, started studying history, so both history and economics in Amsterdam. And when you walk through Amsterdam, it's really, well, you have to develop an eye for it, I think. But there's financial history everywhere there, on the streets, basically. And that really got me fascinated. So I then started combining my early modern history studies and the financial economics into doing financial history, basically, and it was a great experience.
I must ask you, in the beginning of your early days, as you mentioned, you had an interest of history. It's not that common as a kid to have that interest, I guess. How old were you, and where did that come from?
I'm not sure where it came from. I don't think my parents are particularly interested in history, but I always like to go to historical places, basically, right? Places, and I read books about the Middle Ages and stuff like that. I mean, just like picture books, right? Not super elaborate deep dives into history, but I was just curious about those past societies and how people lived then and stuff like that. And I also remember that as a kid, I really liked to go to these open air museums. I guess you have them everywhere, right? Where they have like old villages where you can then experience how people used to live in the old days. I really liked that always.
And today we will speak about your book, The World's First Stock Exchange. How did that come about?
It started out as my PhD research. So after I graduated in history and economics, I started doing a PhD on this subject. And what I first wanted to do was do really, well, not really advanced, but slightly advanced economic stuff with historical data. So historical data about the first real stock market that existed in the world in Amsterdam in the 17th century. But that turned out not to be possible, right? So I've looked through so much sources and spent lots and lots of time in the archives, and I could find stuff, but not the real, data that you need for a real good quantitative analysis. So I then changed my plans a little bit and made it more into a historical research. So what it ultimately became was really a book about the development of this market. So how did it come about, and how did it develop so quickly into a market that when you look at it, really looks like the markets we have today. But then, I mean, 400 years ago. Um, so um, yeah, that's how it came about, basically. So first it was my PhD research. I wrote a PhD thesis about it, and then afterwards I rewrote it into a book that is more for a general audience. So it's more of a narrative. So the book that's in front of you, it's more a narrative history of this market in Amsterdam and the people who were the people who traded shares there.
Great, and one of the sources that you have included in the book is Joseph de la Vega's book, The Confusion of Confusions, published in 1688. I mean, it's the world's earliest book on the stock market. When did you first read it?
Yeah, I had heard about it before I started my PhD research, and that was part of what sparked my interest into this market. Because when you read Joseph de la Vega's book, so it's from 1688, and it's a book about the stock market. So right, about people who traded shares in Amsterdam. And when you read that book, it's really fascinating how advanced the market is. So that is really what sparked my interest and got me thinking. So how did this come about? But I must admit that I've never read the book in full, the 1688 book by Joseph de la Vega. I actually have it. I have it here, or it's not the original. There's only a couple of copies of the original that still exist. This is a Dutch edition from the 1930s, I believe. But you can see, so this is both the original Spanish and the Dutch edition, and it's a big book, and it's difficult to read. It is about the stock exchange, about the market for Dutch East India Company shares, but there's so many digressions into biblical Greek Roman mythology. The author uses those digressions as metaphors for what was going on the stock exchange, but he also uses it to show off his knowledge and everything, and that in very difficult. So the original in Spanish, but even if you read it in translated version, it's difficult. It's a super flowery language. I don't think many people have read it in full, and I also think that the only English translation is an abridged version. But I highly recommend that abridged version because that is nice. It's only those pieces of the book that are really about the stock market, and that is super interesting to read.
And you have included a few of the, best quotes I think from the book. Even though I haven't read it, the quotes that you have included are really interesting.
Yeah, they're super interesting. Yeah.
But how realistic do you think the book is?
That's a good question. And it's difficult to answer. So what I try to do in my PhD research, but especially in this book, is use de la Vega's book as a starting point and try to find out basically what you just asked me, right? So how realistic is this? What did the actual market look like? Was it really like the market that de la Vega described? And in part, the answer is yes. Yes, it was really like that at the end of the 17th century. So the kinds of transactions that he describes, the derivatives trade, the options trade, he really goes into options as a way of hedging risks, for example. Yes, that existed, and I've found many sources that corroborate that and that allowed me to really see what some of the traders on the market were doing using derivatives. But then he also describes how the real the face-to-face interactions happened on the exchange and at different locations in Amsterdam where trade happened, and how realistic those are. I never managed to find out, unfortunately. So I did find some correspondences, for example, of traders who were active on the 17th century market, and they wrote about their trades, but not really about, okay, and then I bumped into this man and started a conversation with him, and then we negotiated a deal of some kind, right? So that level of detail is just hard to hard to find in historical sources. So and the thing is, it is super interesting. So what De la Vega describes in his book is a trade that was really well, there's lots of trickery going on in his book, and I think I guess there probably was a certain degree of trickery on the market, right? People just trying to benefit of each other's inexperience, for example. And he also describes how the market was really physical in a way, like people just touching each other, and he describes the interactions at the exchange almost as a as a fight sometimes. But whether that is true, I don't know.
And to give the listeners a bit more sort of color on how things worked, I mean, you have named the book "The World's First Stock Exchange," but how was that sort of a physical place that where everybody met to make deals and so on? How do you define it as a stock exchange, so to speak?
Yeah. So my definition of a stock exchange is quite wide, I would say. For me, it's a secondary market where shares can be traded. Shares in the company can be traded. So it needn't be at a specific location, like it often is today, right? Today you have to do your trades at a designated stock exchange. But in Amsterdam in the 17th century, it was a little bit different. So the trade mainly or almost exclusively took place in shares of the Dutch East India Company, which was founded at the start of the 17th century. And back then there was no stock exchange building in Amsterdam yet, so there was a place where merchants of the city and other people involved in trade of some kind, where they met and where they did their deals. And that was on a bridge right opposite to where now the central station of Amsterdam is. So when you as a tourist go to Amsterdam and you arrive by train in the city, exit the central station, the first thing you see is a bridge, and that bridge is actually the world's first stock exchange in a way, because that was the place that the city had sort of, where the mayors of the city had said, okay, this is the place where all market transactions should be dealt. And then a couple of years later, so from 1611, there was an actual stock exchange building in Amsterdam, which is unfortunately no longer there. And that building, that stock exchange, was really the center of the trade in Amsterdam, of course, and also of the share trade. But it was not the only place where people traded. So the stock exchange was only open for 2 hours in the morning, and the share traders thought that was not nearly enough. So they often started trading earlier, already in the street. They continued their trade afterwards on Dam Square, which is actually right next to where the stock exchange was. And they continued into the night in cafes, other places, also churches, in the synagogue. There's traces of deals being made almost anywhere in the city.
And most of those deals were done in a specific company, as you mentioned, the Dutch East India Company that was founded in 1602. Can you tell us about this company?
It's a famous company, also an infamous one in a way, right? So it's a famous company because it was a big company for its time. It was a merger of several earlier East India companies that existed in the northern Netherlands. And what it did was it tried to set up trade with what was then called the East Indies, which is now mainly Indonesia. Spice trade, a trade that was up until then mainly done by Portuguese companies, and what the VOC, so the Dutch abbreviation of the company is VOC, and it's often known by that abbreviation. What the VOC tried to do was basically try to eliminate the Portuguese involvement in the spice trade and take over. And they did some good things. So mainly on the side of business organization. So it was a novel company in many respects, and also the IPO that they organized. So they had a real public offering of their share capital in 1602. That was new, and that was revolutionary, especially in hindsight. I don't know if they ever thought of it as revolutionary back then, but nowadays it's often seen as, okay, yeah, that was really the first company that did something like that, and it's something that companies still do today. So it really made an impact. But the company also did many bad things. So they were so at first they mainly traded spices. So they bought spices in the Maluku region in eastern Indonesia, and brought them back to Europe and sold them on the market here. But already very soon they started using more and more violence, enslaved people to work for them, waged war in Asia, all around Asia, tried to also take over all the Asian trade that had already been going on for centuries. So it was really it was a ruthless company in many respects.
And as investors, we try to look at companies. Of course, we want them to behave well from a governance perspective, from an ESG perspective. We want them to be profitable. And this company were at the extremes in many ways, because it was also it had a kind of a monopoly. So that's always interesting as investors, if you can find companies having a monopoly. How did that work?
Yeah, so it was not a monopoly. It was not a worldwide monopoly. So the company came about through the government actually interfering. So there were there have been several East India companies before, private companies in the Netherlands, but then the government said, well, it would be better if we merged all these companies together, because we are then so united. We are much stronger in the war against the Portuguese in Asia, and then to get this united company really started, the government offered a Dutch monopoly on all the trade with Asia. So this united company, the VOC, was the only Dutch company that could trade with Asia. But of course, I mean, if there was a Swedish company or a Danish company or whatever, British company, and of course there were other companies in Europe that tried to do the same, they were not bothered by this monopoly. But it's true that from an investor's point of view, this monopoly was of course very interesting, also because it allowed the VOC to really set the price, right, for spices, especially in the Netherlands, of course. But they became so powerful and so dominant that they could set the prices for spices all over Europe. So that was interesting, and it also made the company quite profitable. But what was less in the interest of investors, or at least many investors complained about it from the start, was that the company wasn't only interested in trade. So their goal was not to only make profit from transporting spices from Asia to Europe, but they also built fortresses, waged war, sent a really large army to Asia, and of course all these soldiers had to be paid and fed and everything, and that cost a lot of money, and was not, well, maybe in the longer term it was in the interest of investors, but in the short term it wasn't, and investors got quite nervous and angry about that.
And you mentioned also about this IPO in 1602. It's fascinating to think about that. Can you give a bit more color on how that actually happened practically?
Yeah, sure. Yeah, the IPO is super interesting, and what is great is that the book that was used during the IPO. So there's a capital register where people could subscribe capital to the newly founded company. It has survived, so it's in the Dutch National Archives in The Hague, and you can actually view it online. So just flip through the pages, and you see all the names and all the amounts that were pledged to the company. So that's really a great source. The first time that I really got my hands on it was really like a historical sensation for me.
And how many investors participated?
In Amsterdam, a bit more than 1,000, so 1,143 in total. And some investors invested for more people, so they for example, traveled from other places in the country to Amsterdam. So it was then just one person subscribing, but that person got money from several other people in his place of origin. So we don't know the exact amount of money who were the exact amount of persons, sorry, who were really involved in this. But let's say 1,200, maybe 1,250 in total. And what's interesting is that before the VOC, there have been other companies that had issued shares, and these companies they always they approach their investors within their own networks often. So the entrepreneurs of these companies, the directors, they often knew people, right? So they ask around, they ask for business relations, family members, whatever, to invest in their company. So there was always a personal relation between the company and the investor. And what's interesting is that was still, in a way, the case with the IPO of the VOC. So even though it was much bigger, and it was a much, it was not just the private networks of the founders of the VOC where the initial investments came from. But because the VOC didn't have an office yet in 1602, they used the private house of one of the founders of the company. His name was Dirk van Os, for the IPO. So you should imagine if you were an investor in 1602 and you were interested in this IPO, you had to go to the just to the private house of a person, ring the doorbell, maybe enter the house, and there was this founder of the company, and the bookkeeper was there, and there was this big register, and you could write your name and an amount of money there. So it wasn't the anonymous sort of experience that it is today. If you invest, if investors today often only see their screen, right, their computer screen, they see some charts, they see some interface of a broker maybe. But back then it was really like going to a friend's house almost. You could look the person in the eye to whom you were pledging your money, right? So that's a different relation than we often have today with the companies we invest in.
And during that summer, you mentioned in the book that there was a plague in Amsterdam as well, complicating things.
Yeah, definitely. Yeah, this was early 17th century, so the Black Death was still raging through Europe from time to time, and also in 1602. And they didn't postpone the IPO for some reason. This has always amazed me a little bit. So possibly there may have been many more people interested in subscribing money to the VOC, but they may have been outside of the city for health reasons, right? So as not to get infected. And the IPO was only for 1 month. So it's only August 1602, and by the end of the month, the subscription book was closed, and that was it. And there were never so the company existed for almost 2 centuries, but never have there been any more shares, issued by the company.
So it's clear that sort of the trading was very different from what we have today in terms of sort of, everything is done electronically, of course, now. But how was it to be an investor in the company, I mean, in the early 17th century in terms of disclosures, shareholder rights, and that perspective?
It must have been difficult, especially, I mean, if you look at it from today. Today we're used to being able to find all the information that we need, right? Maybe even too much information. There's information overload there, and you really have to filter it if you want to be able to make sense of it. But back then there was very little information, so the company kept everything secret. So even the financial situation of the company, it was just it was a mystery to investors. They didn't know how profitable the company was, how much debt it had issued. There was no information about that whatsoever. The interesting thing is that at some point investors started asking for, can we have a look at the company accounts? And the answer was no. I mean, and what the company directors then said was something like, "Well, yeah, and I mean, even if we would let you see the books, you wouldn't be able to make any sense of it because it's way too difficult for you. It's way too complex for you." So that was basically how they sort of kept it all to themselves, only to the company. But this was accepted to a certain level, to quite a high level even, as long as the company kept paying out dividends and in that way satisfying the investors, so to say. So the investors they complained a little bit at in the early days of the company, but when they looked at their yearly dividends, they were just happy with how things went. And then on the information side of the story, I mean, imagine that most of what the company was active in, the VOC was active in, was taking place on the other side of the globe, right? Which is far even now, physically far. But back then you had to send a ship that on a journey that took 9 months to get there and then 9 months to get back, to get any information from what is nowadays Indonesia to the Netherlands. So if you wanted to check something, for example, well, yeah, you could write a letter to what is now Jakarta and ask something, but you had to wait a year and a half before you would get a response. So that's, I mean, yeah, it's not really possible. It wasn't really possible for an investor to really learn about what was actually going on. So both within the company and the trade, the situation in Asia, all these things that were really important. So the only things that that investors really acted upon, that they the kinds of information that really influenced their behavior on the market, was first of all how other investors, how other traders behaved on that same market. So it was like this group of men mostly, but also some women who were constantly watching each other. What are they doing? Might they have some other news than I have? What is happening there in that corner of the market? And then responding to that, right? So it was almost a game that took place there in Amsterdam. And then also, what was also super important was news from Europe. So mainly news about wars. War with England was particularly uh, important, right? So, and there there were many wars with England. Or when there was not a war, when it was time of peace, there was always a chance of a new war breaking out. And during those wars, so there have been several wars already in the 17th century between England and the Netherlands. Then the share price always made this really big dipper, just because there was also an English East India Company, of course, and if the English could have had a chance to take over from the Dutch East India Company, they would have taken it, right? So that war with England could always mean the end of the company, and that is really what investors were, or that was the kind of information that investors really used in their trades, in their deals.
And with this limited disclosure, I mean, was it the case that sort of the sponsors were stealing, or I mean, was there any fraudulent activity from the insiders in the company? Has that been sort of clear?
There probably was, but it's difficult to really find. So the directors of the company, there was always a board of directors, and those directors were required to invest in their own company, in the Dutch East India Company. So they owned shares, and considerable amounts of shares also. And yes, they had insider information. They had access to all the financial statements and to information coming from Asia. So they were the first. They should have been the first to know about things that were going on in Asia. And I've tried to look into this, but I couldn't find that many trades by those directors themselves. And what might be the case is that they were not trying to benefit from their insider knowledge, but I think what was actually going on was that they didn't do it through the official channels, but used derivatives transactions, maybe went through middlemen for those transactions, and that is just too difficult to reconstruct 400 years after the fact. There is this one famous example, though, of a company director. His name was Coenraad van Beuningen. So he was he had been a diplomat for a long time in Stockholm, actually. So he'd lived in Stockholm, went back to Amsterdam, became a mayor of the city, director of the East India Company, and he was really. So this is around 1688, by the way. So around the time Joseph de la Vega wrote his book, and he was really convinced that the shares in the Dutch East India Company were undervalued. So he started doing all kinds of trades, and then war broke out with England, as so often, and he made enormous losses on his investments, and went bankrupt and had to sell off his house. And the story goes, he went mad from this experience. So his mind just collapsed because of his financial situation as a result of the stock market crash of 1688. But he's really the only example of a director of whom we know that he was really active on the market and tried to do something with the insider knowledge that he had.
And you mentioned that sort of rumors about wars or even actual wars, of course, drove the stock price. But can you talk about sort of how much that impacted the stock price versus maybe more fundamental, such as that sort of the trading went well and maybe the dividends increased or so on?
Yeah, that's an interesting question. So a colleague of mine did some research on that, and it's focused on the 18th century. So what he did, his name is Peter Koudhuis. What he did was that he looked at daily stock prices. They're difficult to obtain for the 17th century, but for the 18th century, it's easier. So he looked at daily stock prices for the 18th century, and then also looked at weather information. And on really bad weather days, so stormy weather, for example, he knew that there could not be any news coming in from England, because the ships that carried that news, that carried the letters from England to the Netherlands, just couldn't travel on the North Sea. So he was really able to disentangle sort of what was driven by news coming from England, for example, and the more fundamentals. But for the 17th century, this is not really possible to do. But what is interesting is that the dividends did, of course, make they were the only real fundamental information that investors had. So what you do see is that around the time when the directors of the company convened, so there was a yearly big meeting where all the directors of not only the Amsterdam chamber of the Dutch East India Company, there were 6 branches in total, and they all came together to discuss, for example, the dividend payment. So this was a yearly meeting, and around that meeting, you see that the actual fundamental information about the company. This was the only piece of information that really came from the company itself, right? So if the dividend went up, that was regarded as good news. So investors thought, well, if the dividend goes up, then the financial situation is probably pretty good, or at least better than last year. If it stayed the same, well, then it stayed the same. And if there was no dividend or a smaller dividend than the year before, it was bad news, of course. And around this meeting, when the meeting was held in Amsterdam, and it was often held in Amsterdam, there was the stock market activity really went up, and people were frantically walking from Dutch East India House, which is still there, by the way. So if you visit Amsterdam, you can actually see the original East India House where those meetings were held, and it's real close to the stock market, the stock exchange, and Dam Square. And investors were really walking back and forth, trying to catch the directors as they got out of the meeting room, and just try to see from the way they were looking, from the way they were talking with each other, whether there was likely to be a positive dividend announcement or a negative one. So this was really the moment, the time during the year when fundamental information was available in the market.
But then those dividends could also take different shapes. It was not only cash, right?
No, that's right. It was not only cash, although investors did prefer cash. So when the company had cash available, they would pay out cash as dividend. But especially in the early days of the company, so in the first decade, more or less, after the company was founded, there was just not much cash available. Everything was invested either in ships or in commodities or in fortresses being built in Asia. So at that point, the company paid out dividends in kind. So investors were, for example, or they got paid out in spices, because the company did have spices available. So as an investor, you could then go to East India House, and you would get a bag of pepper or nutmeg or mace or one of the other spices that were traded with the Maluku region in these early days of the company. And it's always, at first I was a bit, so there were some really big investors in those early days, and I made some calculations and thought, well, yeah, I mean, imagine getting this much nutmeg from the company you've invested in. I use nutmeg from time to time, but I mean, it's tiny little bits, right? It's not something that you really eat large amounts of. So I thought, how did they ever? What did they do with this? But then, of course, these big investors, they were all merchants. They were used to trading stuff, so they got paid out in kind. They received dividends from the company, but what they did was they shipped this to other places in Europe, brought it on the market there, and probably received a nice income from that.
It's clear that having an informational edge was really crucial in the 17th century, and it has been since then as well, of course. But I'm curious what you learned about how the emotions played into the actions of investors and traders at this time?
So yeah, information was super important, as it is now, and the same for emotion. We just had this turmoil on the market, of course, with tariffs being announced by the U.S. By Trump's administration in the U.S. And you see how much fluctuations that sort of causes, right? And there's a lot of emotion, a lot of uncertainty in the market. Then all of a sudden, and that was the same in the 17th century. So one of the nicest finds that I had in the archives was a correspondence of a trader in the second half of the 17th century. So he was a super wealthy man. His house is still there on one of the canals in Amsterdam, and it's a really nice house. So you don't have to feel sorry for him in any way. But I did feel a little bit sorry for him when I read his correspondence, because he was just so nervous and so panicky and so emotional about everything that was going on the stock market. My goodness. So what I read in his letters was he had this informant. So he had someone in the southwest of the Netherlands, which is closer to England, for example. So news from England was there before it reached Amsterdam. So he had someone there who was just, basically trying to get information and then sending that by express letter to Amsterdam to inform this merchant in Amsterdam. And the informant was doing a good job. I mean, he shared all the information that he got immediately, but of course it was always just too late, or there was someone else who had a different piece of information that turned out to be better than the information that my investor got from his informant. And he just got so angry with his informant every time. So every time he wrote back, yeah, well, you shared this information with me, but I found out that you also shared it with someone else, and he was there on the stock exchange just before I was there. And then some other time, yeah, you got some news, but it turned out to be incorrect. And it was just, it really was an emotional. So he was just super nervous and tried to make better deals than other people, tried to have an information edge on other people, but he just failed every time almost.
I think many people are still feeling similarly today, and now they can check the stock prices all the time. So it's
yes, I guess so too. Yeah.
But as we speak about the Netherlands and speculation and emotional trading and the 17th century, I'm sure that some of our listeners are probably thinking about the tulip mania that happened. How does this play into your story about the world's first stock exchange?
Yeah, so the tulip mania is a super interesting event, basically happening in mainly in Haarlem, by the way. So the city that I'm in right now. That was in the winter of 1636, 1637, so quite early in the 17th century, when all of a sudden tulip bulb traders, they started, paying really huge amounts for something as simple as a tulip bulb. And that was really a speculative frenzy, and it didn't really spill over to the share market, or the other way around. It was also not the case that there was some speculation or extreme speculation going on the stock market, which then spilled over to the tulip mania. But it did. I mean, it was. You do see also in the stock in the share prices of the Dutch East India Company that they were quite high during the tulip mania, but there was not a super peak like in the tulip trade. So I would say, yes, there is some relation. There was probably some of the speculative frenzy that also inspired maybe some people to start trading shares as well. But they were really separate. Uh, they were mostly separate things. I would say. Also, there were very different communities that were active in them. So the tulip mania was mainly Mennonites. So a Christian special type of Christianity. And Mennonites were not very active or not at all active in investing in the Dutch East India Company um, uh, because of their religion, they weren't allowed to invest in anything related to war or armed conflict. And of course, the Dutch East India Company was very active in war and used arms all the time to suppress Asian peoples. So um, yeah, they were different communities. So Mennonites in the tulip mania, everyone else in the Dutch East India Company share trade, I would say.
I think it's really interesting when reading the book and you have been writing about the tulip mania, that it was so few people that was actually involved in the trade.
Yeah.
And now it's sort of, when we read about it now, every time there is a crisis, boom and bust and so on, it seems like, I mean, I think everybody thinks that it was really, really big. So tell us a bit more about that, sort of the size of it.
Yeah, it was really only a handful. Well, not a handful of people, but maybe in total throughout the Netherlands, maybe 100 people, maybe a little bit more. That was about it. There's a really good book about this by Anne Goldgar. She's a cultural historian actually. So it's not really about the financial side of the tulip mania that she writes, but she really writes about the community of those um, uh, tulip bulb growers, but also the people who traded in those bulbs. And it's fascinating. It's a very small, tight knit community that somehow got into this frenzy, right? So it really was small. And by the way, the number of people really active in the share trade in the 17th century was also not too big, right? I mean, my estimate is that there were maybe a couple of hundred really active traders on the market, and then maybe in total, so also less active traders, maybe 1,500. But that was about it. So it's really, I mean, if you compare that to today, it really was a small market. Most people knew each other, right? They all lived. Well, they were not all neighbors, of course, but they lived in a town in the city, Amsterdam, which was large for early modern European standards, but it was very small if you compare it to the cities of today. So it was really a different world where this where the stock exchange first emerged.
What's amazing is that they were so sophisticated. We haven't talked so much about naked short selling and all the derivatives. I mean, you mentioned some of them, but it was, even though it was not a huge crowd, it was quite many people because there was only one company that they could trade, or maybe one other, right?
Yes. Yeah. So it was mainly the Dutch East India Company, and then later there was also the Dutch West India Company. But that has never been a very big company, and also the trade in its shares was never became really active. So it was mainly this one company that people could trade in. But of course, they could also invest in other stuff. Real estate, for example, was a important important type of investment back then. And you're right, the sort of group of people investing in and being active on the stock exchange was not that big, but that may actually have helped the market become so sophisticated so quickly. So you, for example, mentioned the naked short selling, and that is indeed something that emerged really quickly. So already 10 years after the founding of the company, people were really actively um, engaging in forward deals. So it's a bit like a futures transaction of today, but slightly different. And they basically, what they found out was that it was much easier to do a forward deal than it was to do an actual share transfer, because for the actual share transfer you always had to go to East India House to officially and legally transfer your share to the account of the person you sold it to. Whereas with the forward deal, you could just have a handwritten contract. So both sides of the transaction would have the same contract, and then on the settlement date, the two sides would again, meet and settle their transaction, and no actual share transfer had to take place. You could, of course, still go to the East India House and do the actual share transfer, but you could also just settle the price difference between the market price at the settlement date and what you had agreed on in your written contract. And that was easier and it was cheaper. You didn't have to pay the bookkeeper fee, etc. And then they quickly found out that you could also engage in this forward trade when you didn't actually own any shares at all in the VOC. So you could just go to the bridge. The exchange location back then was still the bridge, which is now opposite Central Station, and then back then right by the harbor. You could just go there, do some trades, and settle your deals when the settlement date came. And this was really naked short selling. So selling something that you personally don't own, and that even doesn't exist, right? So they were just selling something, a share that was not in any register, that had never been issued by the Dutch East India Company. And this was a super risky trade. I mean, there were no down payments of any kind involved in this kind of transaction. So people really had to trust each other. They had to trust the person who they were dealing with um, uh, for this kind of transaction, and that could work because the community was relatively small. These people knew each other. They almost all of them were um, merchants, active in trade. um, they had reputations that they needed for their day-to-day business. So they knew that if they would not comply with what they had promised in a derivatives deal, then their reputation could be gone just like that, and then they were economically dead, more or less, in Amsterdam. So this relatively small, tight knit community, the role of reputation, that really um, functioned as a foundation, almost like we have legal systems right now. Back then there was a legal system as well, but this reputation and more the informal rules were much more important to really let the market take off. And later on, of course, there were crises, and people found out that they couldn't always trust each other, even though people had reputations. And that's when the rule of law became much more important, and when transaction, so the technicalities of the transcriptions of the transactions were improved a little bit, and that, for example, down payments were actually required. So there was an evolution in the market, definitely, but right from the start, it was super risky, super advanced. It was not only the naked short selling with forwards, but there were also options deals, for example. It was really advanced, um, and that could work because the people knew each other, and because they had trust in each other.
And I think what's clear when reading the book is that, I mean, it was really innovative in a way, I think, I mean, at that early stage, but also sort of the flaws in the systems became evident. So much of the changes and updates that we have seen, I mean, in future years have been based on those flaws that were found. But speaking a bit about sort of the future events, I mean, your book covers the 17th century. How did the
Yes, that's right.
how did the VOC develop from there?
Yeah, I'm mainly focused on the 17th century because I found Joseph de la Vega's book so interesting, and that is 1688. So my book really works up to 1688. And 1688 was also incidentally the year when the stock market in London really started to take off, and London subsequently quickly overtook Amsterdam, or at least the stock exchange. The share market of London became much more important and innovative than the Amsterdam market. So for me, the 17th century was really the Amsterdam century, so to say, of the stock market history. So that's why I mainly focused on that century. It's just the most interesting, I would say, from a Dutch perspective. But with respect to the Dutch East India Company, it stayed in business also after the 17th century, all the way up until the end of the 18th century when it went bankrupt. And this was in large part due to bad company policy, I would say. So two things really played a really big role in the company's bankruptcy. The first one was that the company struggled to keep up with developments in the world. So the taste of people in Europe, for example, it just evolved, right? So at the start of the 17th century, people were really craving for those spices of Eastern Indonesia. But later on, they went out of fashion, and for example, tea became much more important. The English East India Company, they were really big in trading tea, but the Dutch East India Company was just a bit too late with keeping up with these kinds of changes, and so they became less profitable. At the same time, the company directors kept the dividends really high. This was probably in large part because they were big investors themselves, so it was in their own financial interest to pay out these really high dividends on a yearly basis, and they also kept the investors happy. But in the end, of course, this is not a sustainable policy. So if your profits go down, you keep the dividends really high. Well, yeah, then at some point, the cash is just gone, right? Money is up, and that's what happened with the VOC.
So it's been 400 years, or even more than 400 years, since trading of stocks began, and a lot has happened and improved in corporate governance and how the trading is done, of course. But I'm curious if someone like yourself, 400 years from now, would look back and see how things work in 2025. What do you think they would say?
Yeah, that's a nice question. I guess they will say a lot of things in 400 years from now, but it's difficult to look into the future. But what I found, so the story that I just told about this investor who had an informant in the southwest of the Netherlands, and he became so angry all the time because it just didn't work out as he had hoped. It really fascinated me when I read that correspondence. It was so nice to look at so nice for me, right? And not particularly nice for him, but it was nice for me to really read about this investor and how he interpreted the bits of information that came to him. And I think what people might be amazed with when they look back 400 years from now is how we respond to news, and people on the markets these days respond to news. What amazes me even nowadays is often when there's some stock market fluctuations, there's always, so when you watch the news, then the financial news, there's always an explanation for it. Yeah, today it is the I don't know, interest announcement by the Fed in the U.S., and tomorrow it's I don't know, consumer confidence in Germany that really drove the stock market prices in the Netherlands. Yeah, I mean, there's probably some truth in that, but how much is it actually only that, and is it only just this? Is it always only just this one thing that really drives the prices? So I think looking back 400 years from now to today, I think people will really, I guess there will be much more information and much better ways to, to process information than we have now. So I think they will laugh, or at least, uh, yeah, look back in with some amazement at how we are currently digesting the news and trying to make it um, to make sense of it, right? So people are always looking for ways to, okay, so there's so much happening right now on the market, but I would like to to be able to just grasp it and have this one bit that I do understand and that does explain everything what's happening. That's what people are looking for. That's what journalists are offering. But yeah, how real and how much does it actually say, this one explanation?
That's a great point.
Yeah, before reading your book, my perception was that newspapers were really important, and they have been important for many hundred years. That's why they have continued to exist. I mean, one thing is, of course, entertainment, and people want to stay updated on what's happening in general, but also for investors. But you describe it as newspapers were already old news in the 17th century. That surprised me.
Yeah, they were always one step behind, or even several steps behind the actual news. And I think that's it's still the case today, right? And that's why the high frequency traders pay so much to have the best internet connections to the modern day stock exchanges, because they really the split second counts. It counts today, and back then, 400 years ago, it wasn't a split second, but a day or a couple of days. But that also counted. If you could be just ahead of the of the news, or at least of other people having the same information as you, then you could make really profitable deals.
Yeah. And then it's about holding on to good companies over long term and not being scared out of them.
Yeah.
So if we turn over to you a bit, I mean, you're a senior researcher with the Huygens Institute in Amsterdam in the Netherlands. For those not familiar, what is the ambition of the institute?
What my institute tries to do is two things. So first of all, so it is a research institute. So we do research into a range of topics that have some relation to Dutch history. So it needn't be history taking place in the Netherlands, but if there's some relations to also colonial history. So history of the Dutch East India Company plays a big role at my institute. Then that's something that we're interested in, and we mainly or we often use computational methods to do research with historical sources. So it is an institute that's really advanced in digital methods and also in digitalization. So the other big mission of my institute is that we try to enhance the accessibility of historical sources that have something to do with Dutch history. So, for example, the really rich and giant archives of the Dutch East India Company, they've been preserved for a large part in the Netherlands, in The Hague, but there's also large bits of the archives in different parts of the world. For example, in Indonesia and in India. And what we try to do is make it easier for people to do research with these sources. So often the historical sources are being scanned, being digitized by the archives themselves. And what we try to do is then make the handwriting computer readable. Try to find mentions of places, of persons, etc. in these sources, so as to make it easier for people to find those bits of information from a big archive like the archives of the Dutch East India Company that are relevant for their research.
And the world's first stock exchange was your first book. What other topics have you been fascinated about and potentially thinking about writing another book on?
So I've also been fascinated by another topic in financial history. So I've written a book about a big Dutch banking crisis in the early 1920s, which I really like to do. It was in a way was a similar story to the stories of the investors on the Amsterdam Stock Exchange 400 years ago, right? So it's mainly men who try to make a profit and then do stuff that they might better not have done. So that was a great topic to research and to write a book about. And I'm currently doing some research for a book about sailors, so people working on board of ships. And this also has to do with the Dutch East India Company, of course, because it had a giant workforce, people coming from all parts of Europe to the Netherlands to work for the Dutch East India Company, and often die either on board of one of the ships or when they had arrived in Asia. But today, if also, I mean, sea trade is still super important for the world economy, but you don't see that much of it as a consumer. You buy stuff online and it gets delivered to your doormat, but how does it actually get here in the first place from where it was produced? Well, there's often shipping involved and people working on board of these ships, and it's still a very international workforce, and that fascinates me. So I'm together with a colleague, we're doing research into this and hoping to write a book about it. And maybe someday the tulip mania will also feature on my bibliography.
You have a couple of more years there before the 400th anniversary, I guess.
That's right, yeah. Bit more than a decade, yeah.
But it's good to get started.
So I have some time still. Yeah.
You spent like 4 years going through archives and reading stuff for making this book, right?
That's true, but it would have been a lot easier already now because of the digitization that has happened since then. So I really had to. I spent weeks in the Amsterdam archives going through notarial deeds just one by one, and I could fairly quickly see which deeds were about share trade, because there was always a number somewhere on the page, usually the price that had been paid for a share transaction. But still, it took a lot of time. Whereas nowadays, I mean, all those notarial deeds have been or a lot have been scanned, have been transcribed. So I could just search for the Dutch word for share, and
right.
Yeah, that's a big difference.
Yeah, we're grateful you took on this endeavor anyway and produced this great book. Are there any other books that you would recommend us to read to improve as both investors, but also as operators and business leaders?
I'm not really a investment book reader, but I do like history. And one of the books that I really liked was Galbraith's book about so it's John Galbraith, right? The about the great crash of 1929. It's only this thick, I believe. So it's just a great read. It's so well written. He writes about the years before the crash and then what happened. He writes about some of the investors on the market, it is a great book, and I really recommend it to all listeners.
And I mean, with your knowledge about the craziness of the markets and how that's been over time, how do you think you would handle a crisis now?
That's a good question. Well, as a historian, I mean, I like to look at long-term developments. So I personally really am not a day trader trying to, make a profit out of short-term fluctuations. So, but when I look at the long-term development of share prices, I'm usually fairly confident when a crisis happens that, well, yeah, if we wait long enough, prices will recover and things will be okay again. So that's my take on financial crises. But I must say that this is also just to maybe I say this to myself in part just to ease my own nerves. I mean, so when I read about this one investor who got so emotional and so nervous about everything that was happening on the markets when he received letters from his informant, I think I also recognized myself in him a little bit and thought, okay, yeah, I should make sure that I do not become like him, because I'm pretty sure that I could get very emotional from, if I really try to outsmart other investors and failed at doing that, I guess I would be burned out fairly quickly. So just to save myself from that kind of thing, I like to look at it from a bit more distance, longer term perspective, and try not to get too emotional from the things that are going on in the market.
Lodewijk Petram, thank you so much for coming on Investing by the Books podcast to talk about you and your great book, The World's First Stock Exchange. Do you have something more you want to add here before we finish up?
No, thanks. Other than that, it was a pleasure appearing on your show. So thank you for inviting me.
Great, thank you. And lastly, where can our audience follow you and your work and buy your book?
They can follow me on LinkedIn. There's only one person that has my name, so I'm really easy to find. And I have a blog with some bits, some excerpts, some topics from this book. It's called The World's First Stock Exchange, just one big thing, .com. And my book is available from all the online bookstores, and maybe even you can order it from a local bookstore if you would like it.
Perfect. In English and in Dutch, are there any other translations being done?
Yeah, Chinese and Korean and Greek.
Very nice.
So for your international listeners.
Yeah, super. Thank you so much, Lodewijk.
Welcome.
Thank you.
Thank you for listening to Investing by the Books, a podcast by Redeye. Follow us on Twitter at ib_redeye and email us at ib.podcast@redeye.se. To improve, we'd love to hear your feedback, so please rate and review us. Notice that the content in this podcast is not and shall not be construed as investment advice. This information is meant to be informative and for general purposes only. For full disclaimer, visit redeye.se. I'm your host, Eddie Palmian, and until next time, I sincerely wish you the best of luck on your journey through life and investing.